Unless you would like to mute it, they will stay on the whole time.
So if you've ever watched like C-SPAN or.
Yes, when it's
Don't
green,
talk.
everyone can hear you.
I'm gonna go ahead and call this meeting to order. We're at just about 4:04 PM. Welcome, everyone. Welcome to those, it looks like in Redlands. Anybody joining from Santa Clarita?
Yes, so we're here.
All right. Can everybody hear in both locations? Can everybody hear me okay? Maybe a thumbs up.
Yes, we can hear you.
Redlands, is anybody there in Redlands that can hear? Okay, thank you. All right, I'm gonna call roll. I'm Joshua Stegner, I'm present. Andrea LaFleur,
Present.
thank you. Talia Henry,
Present.
thank you. Dory Burnett, thank you. Sarah Hayworth. I think she's in Redlands. Sarah, can you speak?
Yeah, he's in the back, but Chris is over there. Did she not hear?
Ask her. She
Ask
can
her
hear.
one more time.
Sarah, are you able to hear us? Are you able to say that you're present?
It sounds like they can hear, but it's because I'm not seeing a reaction. Because they didn't. And
We're just making sure we can be heard by
White
Sarah.
light. It's a white light.
Oh. She can hear.
Yes.
All right. Sarah Hayworth, you present?
Present.
Thank you. And thank you. Administration, Denise Burchett.
Present.
Thank you. Dr. Gary Saunders.
Present.
Thank you. Truth Nube.
Present.
Thank you. Craig Wilson.
Present.
Thanks, everyone. If you would please stand with me for the Pledge of Allegiance. Place your right hand over your heart. Ready, begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. And we'll need an approval of tonight's agenda. If I could ask for a motion, please.
I move to approve.
I second it.
All right, we have a motion and a second. We're gonna need a vote by roll because we have somebody remote. Come back here. I'm Josh. I vote aye. Andrea,
but I.
Talia,
Aye.
Dory. Sarah.
Aye.
You, Dina.
Aye.
Thank you. The agenda is approved. We'll need an approval of the minutes from the January 9th meeting.
I move to approve.
A second.
And again, we'll vote by roll. I'm Josh. I vote aye. Andrea,
I vote aye.
Talia,
Aye.
Dory, Sarah,
Aye.
Dina.
Aye.
Thank you. The minutes are approved from the January 9th meeting. Any communication from the public? Anybody in Redlands? Seeks to-
No.
There's nobody in Santa Clarita either.
Okay, thank you. All right. Any comments from board members concerning items not on the agenda?
I just wanted to, address, that we have received some, emails from from staff and family about the EdJoin ad for, the new hiring of the position, that covers, the VRC. And, I just kind of, wanted to see if we can get an update on how that's going, if it's going in a positive direction and we found somebody. We just keep kept updated on them, I think that would be really helpful.
So may I interject?
Sure.
So is that something the board is asking administration to do? Is the board asking administration to update on jobs and postings in the future?
But
I think for this particular situation, considering that, we had some concern about filling, that specific position. I think that, the board should just be updated on that, so that we can,
I don't disagree with you. I'm asking if the board's making a directive for administration because it's not on the agenda and you're asking for it and you're one person. So I'm asking, is the board making that a directive?
well, would you be comfortable with maybe having a conversation with admin afterward or another time to get an update?
Yeah.
Okay. Does that answer your question? Okay. All right, thank you. Next, we'll move on to the consent agenda. If I could ask for a motion to approve the consent agenda, unless there are items need to be further addressed or pulled.
I motion to approve.
I second.
Thank you. We'll vote now. I'm Josh. I vote aye. Andrea?
Aye.
Thanks. Talia?
Aye.
Thank you. Dory? Sarah?
I,
Dina?
Aye.
Thank you. The consent agenda is approved. Next will be our report and communication from Executive Director Denise, then Dr. Saunders, and then Truth Newbay.
Okay, so there is one thing that I didn't, that didn't make it into the board packet. I wanted to share that for the last few years, I serve on the advisory council for A+, one of the associations that we're a member of. And for the last 2 years, we've been discussing in our advisory council about changing the term non-classroom based. So we call this a non-classroom based charter school, which if you ever look in Ed Code, it's all over Ed Code, non-classroom based charter school. So what we found over the last few years with a lot of the political things that we've been going through is that there's a way that they're looking at our schools, thinking that we don't have classrooms, thinking that, or saying that we're only online schools. So there's they don't understand, really what we are. And so we've been talking about taking a bill through the legislative process to change non-classroom based. And so we do have a bill that'll be going before the legislature soon. The term that we're going to be changing it to, well, there's two things about it. First, we were talking about calling it flexible based learning, because we're flexible. We have classrooms, we have hybrid, you could do homeschool, we have the VRC. So I wanted to share at one of our regional meetings, I had Dr. Saunders with me, and we were discussing this about flexible based, the term. And so we were trying to decide, is this what we want to change it to? And he brought up, he said, how about flex based charter schools. And that's what we're going with. So, yeah, that's what we're going with. So it was a great suggestion that you gave us. And so, just so you know, you might see it coming across and that's the term that we're hoping to change it to. Sometimes things go through the legislative process. It doesn't always go through the first time. So you may have to submit it again. But that's the term, flex-based charter school.
That'd be great.
That'd be great.
It sounds a lot better. Like, people don't want to say non-classroom based, so they'll just shorten it to NCB, and it's like, what's NCB? It's like, there's just no clear message
Yeah.
with that.
Yeah.
So, can you, I guess, elaborate a little bit more on what that does for us and how that changes our policies or us as a charter?
It doesn't change really anything about us, just that all it changes is more of how others are interpreting what kind of school we are. So you've got a site-based charter, which everyone knows, that's where it's like a school. You go there every day. And so this is just a term to really identify for us that we do have sites. We're not just non-site based. And one of the main things is we're being called an online school all the time. We're not an online school. We offer so many different ways for our students to learn. So the biggest problem, we're going to have to go through and change all of our documents.
Okay.
So,
Very cool, thank you.
yeah.
I also think that the advocate I think you were talking with, who's helping us with that, has brought up that when legislation goes forward on funding, they like automatically exclude us on funding
Yeah.
because they say, well, they don't even have sites. They're non-site based, right? And they will cut us out of certain funding that may go like we're paying leasing, right?
We were cut out of one of the fundings, that ELOP, I think, grant, one of the grants. We were not given that grant because they said, well, you're non-site based. This is only for site based. So we didn't get that.
So, is there something called already flexible based? I mean, if you're saying that, like there's positive possibilities of us getting more funding, the government and policy is very specific, site-based or online. Is there something like that already? Like, are we gonna qualify for other things now?
I think it just puts us, I don't know that it'll qualify us for any other kind of grant because of the name change. It's just, it's just gonna, we have a whole, all the ed code is full of, when it talks about charter schools, it talks about non-site based or non-classroom based charters. So it's basically just gonna change that so that people will understand we are, we do have sites.
Okay, cool. Thank you.
Well, I know you could read what I put into the report. I'll just kind of summarize and maybe add on that really wonderful things that are coming out of our departments and a lot of good teamwork. Team of us just went to Sacramento to the Educating for Careers conference and that aligns with our endeavors to build our CTE program and in general, just build awareness for both awareness and opportunities for our students to possibly end up having internships while still in high school, to come out of high school, graduate with experience in a field that could enhance their choices, whether they want to get started now, go to four-year college, go to community, just opening doors for students. I'm really grateful for all the expertise that we have in our departments and our teams. Even our curriculum experts right now are looking at how to make curriculum more accessible to our families while ensuring that we have rigorous standards mastery focused programs. I'll just also share gratitude with our HR Director Keisha McDonald, and you kind of reminded me, Andrea, that we do have, this is kind of the season where we start posting positions. We've been posting a lot of, more than just the positions you brought up, and I really appreciate how our HR department is very thorough in ensuring that we have very clear job descriptions so that anybody who we do hire is going to align to Gorman's vision and mission. And along with just all the legal aspects and compliance aspects of what goes into hiring and bringing in people who we know are gonna, follow policy. So appreciate all that's gone into that. And we are going to be having interviews starting in April for many of these positions.
Concern visit.
Oh, gosh. Well, I guess I didn't put it in the report because it happened today.
Yeah.
But our SBSC school, GLC SBSC, had their, we had Lucerne, who's our authorizer, one of our two amazing authorizers. So Lucerne today asked us to just share with them what have been our successes, our challenges, how we're prepping for renewal. And I gotta thank, like, we have team members here who are on it, all of our regional directors. Director Clark wouldn't have been on it because she's GLC, but she was actually part of some of the brainstorming to help come up with it. So our team really knocked it out of the park. Lucerne's response to our presentation today was that you guys were the first of many that we're going to be hearing from, of those we authorize, and you set a high standard, a high bar for all the rest who are going to be presenting to us. So really grateful for how that went today. Do you agree?
And no, and so I will also
I'm not
add-
being hyperbolic, right? They
were over the top
Yeah.
with our data. They complimented us on our data and how we presented it and how we're collecting good data nowadays. And it was, I think this was our third visit with them this way. And I think that this was the most they complimented us ever. So it just went really well.
Good team effort,
Yeah.
Nice job, you guys.
Mhm.
Congratulations.
Thank you.
Great job to all the staff that worked on it too.
Yeah,
Yeah.
thank you.
Yeah, I echo that. Thank you. I think that's good. I tried to put a few pictures in there. That's again, our HR department, getting out, recruiting. You'll see in the resource center supervisors shared some of what's going on as they prepare for things like prom. I think Santa Clarita has an ice skating event coming up. So just like keeping our students involved, even though we have this motto of bringing high quality education home, we still want to feel like a community. So just really grateful for many of the efforts going on in the departments, at the resource centers, CTE coordinator, who's also going to be taking some students. You may have seen that, taking students to the FFA conference, Future Farmers of America. So just so many hands on deck.
All right, thank you. Truth.
Not at this time, but later on.
All right, we're gonna move on to our information discussion action agenda. The first item is review, discussion, and acceptance of Brock Grigsby's resignation from the Board of Directors. As you all know, Brock sent a letter requesting to resign from the board. We'll just need to approve that. If I could have a motion and then a second.
Motion to approve.
All right, we've
I
got,
second.
perfect. I'm Josh. I vote aye. Andrea,
Aye.
Talia,
Aye.
Dory, Sarah,
Aye.
and Dina.
Aye.
Thank you. We will accept Brock's resignation and thank him for his service to the board. Next, we have the review, discussion, and acceptance of Doug Marino's resignation. We've also got a letter from Doug requesting a resignation. If I could have a motion and a second on that.
I motion to approve.
I second.
Thank you. Let's vote. I'm Josh. I vote aye. Andrea.
Aye.
Thank you. Talia.
Aye.
Thank you. Dory. Sarah.
Aye.
Dina.
Aye.
Thank you, and thank you to Doug for your service. We approve the resignation. Our next item is a review, discussion, and approval of the audit report, and Ivy Bailey will be presenting, or Truth, will you be presenting, and they're
Yes, actually, I debated presenting, but just want to introduce our presenter. He's one of the partners with ID Bailey, and he's actually the engagement partner in charge of our audit this year. And his name is Mr. Brian Ruff. And so like I've been saying that they've been auditing us and we've been going back and forth with certain things. So today is coming to present the report to the board. Is Brian there?
Should be a red.
we'll see in readiness.
Yeah, he's in readiness.
Maybe he couldn't hear you. You want to ask again?
Is Brian there? Can you guys hear us in Redlands?
Did we lose him?
We lost him again.
Yeah, okay.
He was actually going to be here, but he also has to attend another board meeting where he's presenting. So,
He's here. Can you hear us?
yes,
Okay.
All right. I heard everything you said, Truth, so I'll get started if you guys can still hear me. Am I coming through clear for everybody, or do I need to speak a little louder?
a little louder, but we can hear you.
Absolutely. Okay, well, thank you for the hospitality here in Redlands. Surrounded by three lovely individuals, and I'm looking forward to going on to that next meeting, Truth, with some food. So they've offered some dinner for me, so much appreciated. So we finally made it to this point where we're presenting an audit for June 30, 2022. We'll probably start our next audit tomorrow at this point, but also noticing on your agenda that you have the second interim report, Truth, that you're presenting this evening. So these audited numbers serve as that foundation, you know, that you would use as a board to further review how this year is going. So audits are a little snapshot of the past, and then you move forward with those interim reports. Ultimately, we start the process over again. So a couple items in the report. First, let me just thank Truth and the entire Gorman team. I know that you know, there's challenges for everybody, and you know, this year was no less challenging for us as an audit firm, staffing resource wise and things of that nature. You know, through human resources and hiring and everything else, I think we're back on track. So we expect this upcoming year's audit to be much smoother in that regard. And I'm looking forward to that. Other challenges that we confront, you know, with this past year audit is that, you know, we're back to normal now. And, you know, thankfully, we're all, you know, moving forward from the past, but COVID impacts the finance people last.
Yes.
And the compliance people last, because you get all those dollars and now you have to audit those dollars. So there was a lot more that we had to do in relation to that on the federal and state compliance level and our audit procedures for that June 2022 fiscal year. So I'm going to highlight just a few pages. I won't take up too much of your time. And if everybody has a copy, and if you don't, that's fine too. I'll go through it. We have a page in the report called the Summary of Auditors Results, and that's broken down in three specific sections. The first section is the report on financial statements. You have an unmodified opinion, which we will call that a clean audit opinion. We did have one comment to make this year, and this is not at all alarming or dissimilar to a lot of clients that we have this year. And you guys did most of the heavy lifting as Gorman and Truth, and also your consulting team. Thank you to Carl for his assistance. That was very helpful as well. You did most of those post-closing entries to clean this up. We had a few that we did identify that you'll notice in the very back of the report that we reported and required to report as an audit finding because we had some cleanup adjustments. But I don't think that, moving forward as you get your resources in place and you start to build that structure with Truth's leadership, I think you guys will moving forward in the right direction. And obviously, whatever assistance you need, we'll be there to help and guide, any new regulations that are coming down this year. Moving forward, we have lease standard implementation for recording operating leases more into a right to use type component where you're reporting all the activity and putting that on the financial statement in the balance sheet section. Another item that I did want to refer you to as I was speaking about those adjustments, there's a page in the report that reconciles the unaudited actuals from September to this report. And within that page, you'll see the bulk of those adjustments that had been provided by Gorman's team. And then on the lower section, you'll see the adjustments that we came up through our audit. Again, thank you to everybody. And we look forward to a much smoother year for 2023.
Well, and thank you.
Questions from anybody?
Truth, I'm not seeing a copy of the report. Or is that?
There's one in there.
Oh,
So-
okay.
Maybe I have an old board packet.
Claudia just sent it to me, so I will email it.
Oh.
But that's what's up on the screen.
Okay, what was it?
I was looking also, thank you.
Oh,
So go to the last page. I think what Brian was referring to.
You want to go to page 37?
Yeah, that is it.
Somebody doing that? Or?
Yeah, they didn't have anything.
Oh, who's flipping through that right now?
That where you went?
Was speaking to summary of auditors results, and you'll see that all the opinions are unmodified, clean audit opinions on financial statements, federal awards, and state compliance, with that one exception I spoke to with the adjustments. You'll notice there the major federal program that we tested this year was the COVID ESF program, very common for most every charter school this year in testing that program. And there is your audit finding. I think if you go a little lower or a little further, there you go. So that will tie out to that other page in the report showing the reconciliation. So those are our audit adjustments, but there was a lot of adjustments provided as well by the Gorman team.
Deferred rent a liability?
What's that?
Is deferred rent a liability? I'm not sure. Or is that deferred? Is that okay.
Yeah, so deferred rent is basically another accounting adjustment requirement according to GAAP, generally accepted accounting principles, where you basically have to account for the difference between cash rent paid and the average of the lease. So that's one of the adjustments that they had to make.
I assume the line of credit is also a liability. So I'm
Yes, so with the line of credit, what it was is, they had to do an adjustment to break it was the CAMs, the monies that we had received to account for the liability between the two schools.
Okay.
And so that's what they had to do. And then for the receivables, they had to do an adjustment because what we had done, we had not so they came in and said certain revenue should have been recognized in the year 21-22. We had kind of like, and then book a receivable for that year, but we had not done that. So they came in and said, looking at our financials, that you should have booked a receivable because it gives the impression that you are understating you're overstating your revenues. Okay. We actually understated, sorry.
Could we get a copy of this report?
Okay, that's, yeah.
I mean, on, like on our own. Either dropped into our drive or,
Yes, I can email it to you guys.
Or email.
And so one of the things maybe also to kind of let the board know what kind of corrective actions corrective action taken. We are working closely with Brian mentioned Carl. He's with Key Charter Advisors and he's one of the consultants that is helping us clean up our books. And so that's one of the things that we're doing. And also because of the high turnover of high level staff that we've had in the department, we continuously have training to have those that are there to also get to that level. But this is the first year because like Brian mentioned, it's been hectic and some of the things were missed during the course of the closing. So we closed our books, but then that's why when I present the unaudited actuals, they are not audited. These are our numbers and we're saying we're ending the year here, but then the auditors come in and look at those numbers and then adjust accordingly. So these are cost adjustments that happen after we close. We are aware of it and we've already taken corrective measures so that next year we don't have to even have that in our report.
I think Brian already mentioned it, but the numbers, the adjustments have been made and will reflect in the interim budget you're gonna present tonight?
Yes.
Okay, so you've had time to make those adjustments.
Yes, as we were working with the auditors, with these adjustments, we incorporated those adjustments to our beginning fund balance because that's
Okay.
where the impact tends to be.
Okay.
Because if we say our beginning fund balance was maybe 5 million, and then we have all these adjustments,
Yeah.
we need to incorporate that so that we reflect a new adjusted beginning balance.
Was that the entirety of the report? Or can we scroll through the rest?
So basically, stop taking. So the corrective action plan, because we are required to kind of like in the report respond to the findings that the auditors give us. And so that's what we are basically saying, that we've hired a teacher advisor to provide financial consulting assistance. We have the team, but we might not know it. We might not know it all. And so having consultants is always helpful because if there are certain things that we miss, they come in and help us.
Mhm.
How did you decide what consultant to hire?
So this Key Charter Advisor, we've actually been using them here at Common for a long time. Before, he used to be with DMS, Delta Managed Solutions, and he's the one that helped us he helps us with even our SP 740 that we have to submit. And he's a very, very knowledgeable person in this company. He gives the trainings at these CCA conferences that we go to, and also CSDC. So he's very, very knowledgeable when it comes to non-classroom based schools and the financial part of it. is not new to comment, is not a stranger to comment. We've been using it for the last weeks. Okay, go down, scroll down.
That should be.
Like the audit report was just emailed, so you should all have access to that now.
I also placed it in the drive, Josh.
Thank you. Does anybody need a little more time to review that? Okay, we'll hold for a second here.
You can have that one. Oh, thank you.
Yes. It will be,
Oversight.
it will be in the second, it will be in the second interim budget.
So don't worry about this. Just worry about- okay.
Yeah. So what you're referring to is in the audit report? And I'm saying your question, the number that you're seeing, is it?
It just is district oversight, which that's not, it's too much to do house.
Yeah, don't worry, don't worry about it. It's part of the audit report, so you're fine.
Thank you. Sorry. I just-
You're all right. Okay. Does anybody else need any more time?
What is the percentage that we're down in our attendance? Does anybody know? Hello?
Yeah, we heard your question.
Okay.
Well, can you clarify how or where that pertains pertains to the audit report as compared to maybe later when we discuss the interim budget?
Well, we have attendance in the audit report, but Kathleen had asked that question, so.
Are you looking
Yes.
for attendance or enrollment?
So what's shown on the report is our ADA, it's not our enrollment.
That's not what I saw.
Are you on page 23 of the audit report? Actually, it will be 20. Is that the page you're looking at, Sarah?
No, I don't know. We'd have to go back to it. I put it down.
Yeah, I can address that when we talk about the second interim.
Okay. Yeah.
I can find it for you.
Okay. So that would be page 20. And you're right, that's the ADA.
The current enrollment numbers are on page 10 of the board packet, if that's what you're looking for.
We can talk about the enrollment numbers when I.
Yeah.
Second interim, because
Yeah.
Ryan will need to go to his next.
Yeah.
I just want to make sure if there was something, Sarah, pertaining to enrollment on the audit, because this is of, closing June 30th of 22. If there's anything pertaining to enrollment at that point, and the numbers that were reported in the audit, we can, if you want truth to try to address that, we can. I think current enrollment, though, would be more appropriately addressed during the interim budget presentation.
Okay.
Okay. All right, then, if there aren't any other questions or comments about the audit report, we'll need to approve it.
What exactly are we approving the audit?
We're accepting it.
Oh, what they're saying, is
Yes.
right? Okay.
I'm sure it's a legal requirement. The board approves the audit report. So if you have questions, we should ask them now.
So maybe can I also clarify? Because these are numbers that the auditors have audited, right? So it's a matter of the board accepting the report after asking the questions like you guys have been doing. But ultimately, it is what it is in terms of what the auditors have done.
Right.
So then do we need to approve?
If there are no other questions, I will entertain a motion to approve the audit report.
I'll motion to approve.
Thank you, sir.
Second?
Thank you. And we will vote to approve the audit report. I'm Josh. I vote aye. Andrea?
Okay.
Thank you, Talia.
Hi.
Thank you, Dory. Thank you, Sarah.
Aye.
Thank you, Dina.
I'll abstain, please.
Okay. The audit report is approved. All right, the next item will be an announcement of board member vacancies and intent to accept applications, appoint the 2 new members. So we've got currently we have 6 on our board with the resignations. And so I'd like to seek out 2 more board members, bring our number back up to 8. I think, certainly anybody with some financial background, some educational, maybe even an educational administration background would be great. And my intent would be to do this as soon as possible. So probably open up a window in the next few days for candidates to begin to apply. And maybe even by the next board meeting to have some recommendations for nomination. Does anybody have any questions about that?
I had a question. Is it easier or harder to meet your quorum with 8 members?
We need 5, so you're saying if we had 7, we would need 4 to meet a quorum.
Just
Well,
a thought.
yeah. I think we have the opportunity to appoint up to, so why don't we see what kind of candidates we have? And what strengths they would bring. I think it's worth the potential. It is a little more difficult, but with some good candidates, it makes it worth it. Anybody else? Questions on that? Or opinions? Suggestions? Reach out to your folks you know that you think would be qualified, that are dedicated, and encourage them to apply. We'll post that on the website. This is not an action item, except at this point, I don't see. So we'll move on to the next item, which is also not an action item, but a review discussion of board member compensation. Yeah, I can hand a couple of these down. An opinion letter. This topic of board member compensation was raised a few board meetings ago. I appreciate the thought and the effort. It is certainly time consuming, and does have some costs at times to serve on a board. But if you kind of take a look through the letter, the legal opinion, Denise had meetings with legal about this. For a few reasons, it's highly discouraged that we would compensate board members. Bylaws, there's some IRS code violations, some liability. And so this is something that actually came up a couple of years ago. We addressed, we made sure that we were not compensating board members, but just in the spirit of making sure we were current, nothing had changed. We readdressed this. And if you have any questions, I'm happy to entertain those. The one area that I think we do have a little bit of latitude in is reimbursement of kind of what you'd consider actual expenses. Technically, maybe Craig, you can clarify this, but when it comes to travel, mileage travel, because of the IRS code, seeing us as volunteers for a nonprofit, is it limited to 7 cents a mile or 13 cents a mile?
It's correct. It uses its own schedule.
Right, so it's different. So, which is clearly well below the actual cost it requires to travel to anywhere nowadays, especially. And so I think what we need to look at is rewriting our policy for travel reimbursement for mileage to kind of what actually represents the actual cost of the travel. Now, only that, whatever that IRS minimum or amount is, would be tax deductible or not non-taxable, sorry. The other portion of it would be taxable, but at least it would be reimbursed. If I'm understanding, is that correct? The way we would do that?
Yes.
Okay. So whatever, I think IRS for business now is 68 or something like that cents a mile for business use. And so I think we would adjust that reimbursement for policy to that point, with the difference being seen as taxable income to board members. And I think that, and maybe Craig, you can do a little review on this based on the legal opinion from Young Mini Corp. I think that would still would keep us not looking like we're compensating directors, but it would just be for actual costs, reimbursement of costs.
Yes, and I think we discussed that issue in the past too, about reimbursing expenses at a fair rate.
All right. So we'll work on that.
If I can say something, can you hear me?
Yes,
think that the compensation per board meeting for the board members would be a mistake, in my opinion anyways. I think it would give a different agenda to somebody that might want to sit on the board. And I say that with all due respect, but I just, yeah, I don't think it's necessary. So in my opinion.
yep, I agree. Thank you.
I also agree. I feel that we're board members because we're passionate about education and we're passionate about the success of this network. And
Absolutely.
I think that, paying for our time is very nice. And it's a nice thought, but I mean, I speak for myself when I say that I do this not to be paid, but because I am very passionate about Gorman and about the success of the school, so.
For the kids' sake, absolutely, 100%.
Good. All right, well, I think everybody's of the same opinion on that. It's not an action item, but if there are any other suggestions on any direction we need to go on that or how we need to review any of those things, I'm happy to entertain that, or you can follow up with me outside of the board meeting on that. I don't want serving on a board to be a financial burden to anybody. And so knowing that there's travel involved and things like that, I think most of that would be, if you traveled for a conference or something like that, would be reimbursed, but the mileage thing is a big issue. It'd be better to rent a car and then the school pay for your rental car to drive to a board meeting than pay for it out of your own pocket and not be able to get reimbursed. So we will address that aspect of it. Okay, I think we're ready to move on to the next item, which is the review, discussion, and approval of adding an additional signer on the ASB banking account for the AVRC. Bruce?
That's exactly what it is. We're requesting to add Jamie Strepo to the ASB account that is held at AVRC. The reason for that is because there's now a need for two signatures. We do have two signers already, but because of the activities that are happening here, some of our referees have to be paid on the day off, and our policy requires two signatures for every check. And so Jamie and the current supervisors are the ones that tend to be more available on site when those activities are happening. And so I think it's befitting for us to add her as a signer to the account. And so I'm coming to the board to request that we add her as one of the signers to the account.
So how many signers are there for the AV Resource Center?
Currently, we have two, and then so she'll be the third one. So the one that we have is our RD Tisha, but Tisha is not stationed at AVRC. So Jamie and Mark are the ones that are here on a regular basis. And so when these activities are happening, they're the ones that are here and so can easily sign the checks. So as the RD, she's more of need basis. That's why it would be ideal to add Jamie as a signer.
So for this account, is this strictly for that resource center, or is it like how many, you know what I'm saying? Like how many signers do we have in total or on this account? Or is it multiple accounts?
So government has multiple accounts for different things, right? We have like our operating account, we have our payroll account, we have our SPSC account, and then we have ASB accounts. So AVRC has a bank account for ASB, and then Santa Clarita has a bank account for ASB, and Redlands Resource Center has a bank account for ASB. And so every resource center has a sign. The only two people that are on all the accounts, it's myself and the executive director. But at the level, at the resource center level, we have two signers currently, not counting myself and Denise.
Per resource center.
Per resource center.
Okay.
That's just ASB.
That's
So
just-
there's,
Yes.
so it's like student store, events, maybe.
Yeah, it's just for associated student body.
So that's different than like Gorman's budget, the network's budget accounts.
Okay, the reason I guess why I'm asking the question is because in the audit report, I saw in there that it wasn't really a concern. They just mentioned that they felt that there may be a lot of extra, like, people that had signing capabilities on the accounts. And so since I read that, that's why I was asking.
In the audit report,
I think it was the audit, either the audit report or in this board packet where it was supposed to go into the audit report and it didn't.
Yeah, I think it's the like the preface to the audit report
Yes,
maybe, or
this
the,
over here, significant risks identified. Management override of controls, this section right here.
yeah, but that, I don't think that has to do with accounts. Maybe we should have also asked Brian to elaborate on that, but it's not pertaining to bank accounts.
Okay,
Yeah, it's not pertaining to bank accounts.
okay. Well, that's what prompted the question, so that's why I was asking for clarification. Maybe we can email and discuss this.
Yes, so the next
Yes.
one, yeah. But it has nothing to do with the accounts,
Okay,
the bank accounts, yeah. Easy, Josh, is Brian still there? You know?
I don't see him there.
Oh,
No, he's not.
oh, okay. Actually, to have two signers, right, or three signers is actually a better control. And I know that from also being an auditor. But I think that speaks to something different, which I can talk to him and then he can elaborate to the board at the next board meeting. He might not be here, but I can get the information so that he can elaborate on that part of what they meant by that.
thank you very much.
Okay. Any other questions about that? Not. I will entertain a motion to approve of the additional signer on the ASB account.
I motion to approve.
I second.
Thank you. We'll vote by roll. I'm Josh. I vote aye. Andrea,
Aye.
thank you. Talia,
Aye.
Dory. Thank you. Sarah,
I,
thank you. Dina,
I,
thank you. That additional signer is approved. And I'm going to go back to you, Truth, for rediscussion and approval of the second interim budgets.
If I stand over there, it's fine, right? Or-
Yes, we put a microphone there, just unmute it.
One, two. Okay, so this evening I'll be presenting the second interim financial report. And this is one of the reports that need to be submitted to our authorizers and then the county and subsequently the state. And so the second interim covers basically our adopted first interim and second interim. So the second interim reports all the activity between July 1st all the way to January 31st. So just a recap again, first interim covers period July 1 through October 31st. And then second interim covers July 1 through January 31st. And then what happens is around this time of the year, this year was a different year altogether, or last year was kind of like a little different. But around this time of the year, the audit is already done. We have our audit report. And then our numbers that we have in the second interim are basically reflecting all the adjustments that the auditors might have proposed. And we did, based on us going back and forth, we did actually take into consideration the adjustments. They might not be to the T because the audit report was not finalized at the time this was put together. But for the most part, all the adjustments had been incorporated. And so a few assumptions were made as we put together the second interim budget. For adopted, you remember for GLC, we had projected 1,200 students for our enrollment. And then at second interim, at first interim, we kept it at 1,200. So now at second interim, we dropped it down by 5 to 1,195. And it just being conservative, but from the look of things, it looks like we might actually even hit the 1,200. And then for SBSC, at adopted, we had 1,400. And then at first interim, we adjusted to 1,350. And then at second interim, we also dropped it by 5 to 1,345. But as of actually today, we've actually surpassed the 1,350. We are now at 1,352, and it looks like we are growing. And one of the things that have been put in place to help with the enrollment, we have consulted with a company called R&B Communications, which Kim is very well vexed about. And this company will help us track and basically address some of the lag that might be there between communicating with our parents. So we're excited about that, and we think it will help with our enrollment numbers. That's also in addition to some of the restructuring that is happening internally. So that being said, we want to go to our beginning fund balance. So our beginning fund balance for second interim, if you notice, I sent you guys the budget narrative so that you guys can follow, and also kind of showing the comparison. So our beginning fund balance for GLC was 8,895,615. Okay, scroll up and then scroll down. Let me go with the memo. Right. So actually, sorry, the beginning fund balance was $9,063,261, and our projected ending fund balance is $366,829, and this is like a decrease of 179,000. So what happens is, with all the activities that happen during the course of the year, if we come in with a deficit, or if we come in with a positive, that impacts our ending fund balance. And so in this case, because our year was okay and we came in, or we're projecting our year to be fine and coming in with a positive. So we compared to the first interim, it's a hit of 179,000 to our ending fund balance. And then for the multi-year projections, we are projecting to be at those numbers, 10,219,560 and 10,549,620. And then for our reserves, what we do is we calculate them based on 5% of the operating expenditures, and then also another additional another additional 3 months of operating expenditures. So if you scroll down to, yeah, right here, right, you can make it bigger. So yeah, then go on. So the adopted, this was last year. I mean, last year when the board basically accepted our adopted budget, and then this was last time when we presented the first interim. You want to scroll to the left? Right. So basically, where we are now, like I said, we are reporting also our actuals of all the activity between July 1 through January 31st. That column here is for the actuals. And then these are our second interim budgeted numbers. And these take into account like the annualization of the activities in terms of how are we spending, and then annualize it. And then so our revenues were projecting to end the year with 17,204,178 sorry. And this is GLC. And then for our revenues, like I've mentioned in the past, our revenues come from different sources, federal and state. So here, what I'm just summing up is all the revenues based on the different sources where we get our money. And then our expenses, scroll down. So our expenses that comprise of certificated salaries, classified salaries, as well as contracts and operating expenditures. All that comes up to $16,900,560, right? And then the difference between our revenues and our expenses is either excess or net decrease. So we came in the black, we're not in a deficit based on our projection. So basically our expenses were less than our revenues. And we want that number to grow actually every kind of like year. But if you look at the first interim and now the second interim, at first interim, our number was a little higher, but at second interim, it went down because of some factors that I'll touch on later on. And then scroll down. And then this is where you find our beginning fund balance. This is where that's our beginning fund balance. And then this takes into account those adjustments that the auditors were talking about. So you have, if you scroll to the left, just so that I show the board, right? So you have your beginning fund balance, like based kind of like what the auditor was saying. As of July, we have our numbers. So if the auditors come in and do any adjustments, make any adjustments, then they will record or will record those adjustments so that it ties to the audit report. So those adjustments will be in there. So scroll to the right now. So that line B. So these are all the adjustments that the auditors made that have to align with our report. And then so our new, basically new beginning balance is that one, 9,063,261. But then because we had excess in our revenues, if you add that to that beginning balance, your new ending fund balance will be 9,366,879. And then down here is basically breaking down, like I was saying, the 5% of operating expenditures and additional 3%, and then net investment in capital assets. That number should tie to that. So as board members, if anytime I present to you this, and then you look at these numbers and then they don't tie to that, you need to ask me questions because they need to reconcile to that number. Right. And so some of the things, some of the changes that happened during the course of the year is we had some increases in expenditures. If you look at the narrative that I sent you, I kind of tried to detail because of the revenues projecting down by 5 for each school. That meant our revenues kind of like also went down by about 50,000-60,000. And same thing with expenses. If our expenses increased in some areas where we have contracted services, we saw our expenses increase because mainly, for example, special education, at times we don't know what kind of students will be getting as a school and this kind of services that we need to provide. And so those contracted services might be expensive and also might impact our budget. And so that's why when I say to you that if you look at the first interim and the second interim, that dollar amount went down. Why? Because we had to basically provide those services as mandatory services. Right. And then I think that's it for GLC. I can entertain any questions that the board might have. And then for comparison purposes, like I said, in this report, you'll see your adopted, your first interim, and then the second interim. And then in the narrative that was sent to you, you'll also basically see that. And then in the narrative, we went on to basically describe and detail out some of the changes that we saw.
Truth, could you tell me how our ending fund balance compares to Foreman or GLC historically? Like, how do our numbers look compared to where we've been in the past?
I think maybe in the past from 1819, because prior to that it was one school, and then 1819, our numbers went down a little bit because we had, I think for 2-3 years, we were like continuously in a deficit. And so every time when a deficit, it impacts our ending fund balance. But for the last year and this year, basically in terms of our projection, we're projecting our ending fund balance to start kind of like growing as long as we don't have deficit spending.
And I vaguely remember from a long time ago, I think it was before I was on the board, I heard you say something about how the state doesn't want you just sitting on a lot of funds, like they kind of look at it weird if you have too much. What would you say is like the highest you could go on having a fund before the state would be like, why aren't you spending?
An interesting question. That's something that actually was addressed at the governor's workshop. Well, it's in relation to the reserves that each school or charter school can have, right? Before because in the state's mind, they are giving you money to educate students. So if they're seeing that the money is not getting spent on the students, but actually you are busy building reserves, it becomes a problem. Charter schools legally do not have like a cap per se, right? But they don't even have a requirement for reserves, but it's a prudent business way to do business, basically to have a dollar amount. And as government, I think we've always took the approach of maybe 5% of building our reserves. But because also I want you to be aware that anytime you have a deficit, you're eating into your reserves.
So 35% you said?
No, 5.
Oh,
35, no.
Five.
Yes, but you're right. I did say that, and I think that was like 4 years ago. I did. And we're at the Division Street. But I hope you had a chance to look at even the department summaries that I sent to you guys, so that you can see the differences between your first interim and second interim.
It looks like we've kind of reallocated some funds from unrestricted net position to reserve.
Which
Let's see, code 9790.
scroll to the left, Kim.
You're in the right area there, but it looks like from adopted budget, yeah. So there the reserve is 1.77. With the unrestricted at 7.5, but then in the second interim, we've reduced the unrestricted position to what, around 3. But we've increased the reserve for uncertainties, both.
Yes, I think.
Is that just kind of a housekeeping thing?
Correct. Correct. Because we look at basically where we are financially, and actually here, to be honest, what we should have done too, we should have broken this number down a little bit, and then have items in that group.
Yeah.
But unrestricted is more like cash all, but you can reassign it as you see fit.
Are there any questions for anybody else on the GLC budget? Second interim budget?
Oh, sorry. And then we also have the cash flows because we are required also to present the cash flows. Thank you. That's all. So for the next 2 years, so breaking down all our cash flows in terms of the monies that we're projecting to get, and these are beginning cash balances, the actual based on what we have in the bank, and then what we're projecting to receive. And then there are months where maybe the cash flow might be low. Why? Because we are not getting the money in this month of March, but maybe in April we might get 2 times that dollar amount to make up for the March that we missed, the money that we missed. And then we have our expenditures to break down. And then the 16 million, the revenues that I showed you in the budget and the expenditures are here, then kind of broken down throughout the months. All right. Well done. So yeah, so we are required to show our budget alongside with our cash flows for the next 2 years.
I'm kind of curious about something I saw earlier. I think it was in the audit. We still have that CAM loan, right? There's still some balance on that CAM loan.
Yes.
And it looks like our cash flow is in a better position right now. And the interest is kind of substantial. Would be, if we get in a position, maybe we should just pay that off, or was there a prepayment penalty, or what do you?
I'm smiling because we're actually having that conversation with Gloria. Actually, my bad. Gloria is here, our accounting and payroll manager. So she's here as we present. She's part of the team. We're actually having that conversation. We intend paying off. I think our balance is about 100-something thousand. So we intend paying it off in the next month or so.
Okay.
Yeah, because definitely the interest rate is high. And so in next year's even audit report, there won't even be, they will highlight that has been paid off.
Good. Yeah, I realize what business I want to be in next. All right,
Did we ever, did Sarah have a question about the second interim absences that we were supposed to add?
Attendance, right? Sarah?
Yes.
You want to ask anything here on the attendance? This would probably be the place.
No, that we're good, guys.
Okay. All right, I think Truth, you can move on to SBSC and then we'll approve them both together.
Oh, okay. So same thing with SBSC, and I always say this every time I'm giving the presentation. The difference with SBSC is we have to use San Bernardino template. San Bernardino wants us to use their template, but the numbers are kind of like the same in terms of following the logic of the beginning fund balance, ending fund balance. So for our second interim balance for GLC SBSC, we are projecting a beginning fund balance of 3,152,016 and a projected ending fund balance of 3,407,242. This is an increase of about 78,890, meaning that again we spent less in that regard compared to a previous first interim. And then the multi-year projections for the next 2 years, we're projecting to be at 4,206,923 for 23-24 school year, and for 24-25, 4,971,998 respectively. And this can change because charter school is a weird animal altogether, because things can come. We can go to the governance workshop, which will be attended in May, and then they can come in and tell us, oh, you guys are getting more money, or you guys are getting less money. And then it changes that for the good or for the bad. But for the most part, our role, our responsibility is to have those projections. And then also for the reserves, we did the same thing as GLC, 5% of budgeted operating expenditures which gives us 705,959. And then an additional reserve for economic uncertainties of 1,496,000. And then actually, I also want to, if someone maybe was going to ask this question, some people might wonder that, wow, why is that GLC beginning fund balance or ending fund balance is way smaller than GLC, right? So you remember that GLC, so for each revenue stream for the monies that are coming in, they come in based on the charter school, right? And Government Learning Center has been in existence for many years. And then GLC SBSC was established 3-4 years ago. So we are still building up on that school's finances, but GLC's revenue has been coming in since 2000 when the school was established. Okay, scroll down. Okay, so this is kind of like, let's go to the summary so that, so with this template here, and I just don't want to bore you to death, but this template for San Bernardino is basically breaking down things a little further, like in terms of ADA, what was our ADA adopted and now at second interim. That's what that is talking about. And then by grade level, and then you have your total ADA. Then scroll down. And then here, basically these are assumptions. What were the assumptions that were used to calculate our LCF revenues and all that? And then these assumptions for the most part come from FITMAT, right? Or basically from the governor's workshop. They tell us, this is the template you use, these are the assumptions that you're going to be using, this is the dollar amount that you'll be receiving. And then once we put in that number, we also put in our certificate salaries and benefits information, breaking it down in this way. And then also, again, going back to the assumptions, then we also put in what's our FICA, what's our Medicare tax, unemployment. We have to put in that based on the information that we receive. And then here, that's where we come to our numbers. Same thing, our revenues, and then our expenditures. So we have different revenue source streams where we get our revenue, as well as the areas where we spend our money. So go to the summary so that I can show the board. Go down. Yes. Scroll down. And then go up again a little bit. So it breaks it down based on unrestricted and restricted. But where I want us to go to is a summary of the restricted and unrestricted. So scroll, maybe let's stop as restricted. Let me explain. So with the restricted, this is where this is the final balance. So all the adjustments that might have been made to the audit, this is where we'll include them. But on that other GLC template, it was also shown in a different way, but same concept, same thing. And then scroll down to keep going. And and then here, this is where we have all the restricted programs that we have, like educator effectiveness, EOL, right? Learning recovery block grant, arts and music grant, SPED, ethnic studies, lottery. So these are all the different monies that are restricted that we receive. And so we have to account for those monies under restricted because they are only used for specific purposes. And then here, where basically it's the summary, this combines your unrestricted and restricted. And again, scroll to the left, sorry, to the right. Yeah. So, and then again, we are required to show our adopted, right? And then now our actuals in terms of the activity, how much have we received between July 1 and January 31st, and how much have we spent between July 1 and January 31st, and then our projections, that's where we are. And so having said that, for our GLC SPSC projection for our revenues, we're projecting to receive 18 million by end of the year, 18,245,014. And then we are also projecting to spend $17,985,789. And then with leaving us with excess of $255,225. $255,225. And then if you compare to the adopted, which I think is this one, or that one, right? This, we are coming in better with GLC SPSC. We are actually spending less than we had projected for SPSC. That's why we're going to have that. Scroll down. Yeah, stop it. And then right, you just by looking at this, I can tell. So these, again, in parentheses, these are the adjustments that the auditors kind of like talked about this evening. And then so our new ending fund balance, if we stick to what we have in our second interim, we should be at $3,407,242. And then here we also break it down further by scroll to the left. By components of ending fund balance. And then maybe let me stop there before I actually go to the cash. So same thing, we have our revenues, we have our expenses, and whatever we make in excess then adds to our ending fund balance. Any questions you may have?
Good.
Okay. And then scroll down. Let's keep going. And then same thing here with the cash flows for the 2 years. We break it down by how much we have or how much we had each month from July through January 31st and throughout the year, as well as the revenues that we are receiving or that we have received so far, and then break down our expenses too. Let's go down. And then we have, so that was 20, this is 22, 23 cash flow. And then if you scroll down, we'll have our 23, 24 cash flow. You can also scroll to the right. Right, that's where we are in terms of our financials for GLC and GLC SPSC.
Truthfully, I'm not understanding right, but the cash inflows and outflows look like they're higher for SPSC than they are for GLC. So how is 3 months of operating expenditures less for SPSC and GLC?
Yes, because the operating expenditures are based on what our expenses are. So the easiest way is go up to the expenses.
Well, the summary.
Yeah. Summary. So, probably right. We just want to make sure we're right. So if you take that number and multiply it by 5%, right? Those are operating expenditures. That will give you the total amount.
Thank you.
And the same thing with GLC. You just take the expenditures and multiply by the 5% and then give you the
Is that also for the 3 months? Is that, or is that two different things? The 5% and then 3 months of additional.
Yeah, so for the 3 months, so what we did is, if I'm not mistaken, we took that dollar amount and multiplied it by 12 to give us our monthly spending, and then.
Okay.
Kelly, were you saying that the reserve was not as high? Is that what you were seeing?
Yeah, the reserve looked like it wasn't as high, even though.
Yeah.
the Summaries of the cash flows were about the same.
Yeah.
So that,
Is it also just a factor of the kind of the way it was split originally and SBSC not being in existence as long,
Exactly,
building up those reserves?
correct.
Yeah.
Because it plays a big part, the fact that even when we, like I said earlier on, GLC has been in existence for a while. And so monies that were coming in under the GLC, what's it called, CDS code, I've forgotten what's called, but under the identification number for GLC. So even when we split the schools and started GLC SBSC, GLC still had a good chunk of money. And this now, even in as much as we might have kind of like similar expenses or revenues, because the calculation is different. When we do our calculation for our economic uncertainties and reserves, we are basing it on the expenses. And so if you're taking the 5% and calculating that, and then your operating expenses is based on the revenues that are coming in for each school.
The other thing I remember happened too, in the first couple of years of SBSC's existence, it didn't qualify for as many of the funding sources, right?
Absolutely, thank
So-
you. You just reminded me again, yeah.
At the end of the day, we're one organization,
yeah,
and so it's a little bit of like internal. Just kind of the way you're accounting for things internally.
yeah, I was just. Yeah, because I knew the number was a lot different, even though the enrollment's about the same, the cash outs looks about the same,
Yeah.
so. But again, it's the reserve need to, anytime.
And actually, that's a good question, because when you guys are doing your analysis, it's good, because in as much as they're looking at time input, but looking at two schools kind of to see how it's paid out. It helps kind of like start for some questions of, okay, what happened here? And then for the most part, we have the answer.
I don't know if you, what you do if you have one school suffering so badly that it's not financially solvent anymore. What do you do? I don't know that you can take money from the other school to kind of bolster, even though we're one organization. I'm not really sure what the path to navigate that would be.
You technically you could do like an interfund transfer, as opposed to going and getting CAMS loan, right?
Yeah.
And then they're charging you a high interest rate. You could most probably do an interfund transfer, as long as it's payable within 1 year, right? But if it's something that's going to be over 1 year and all that, it becomes like a loan from one school to the other, and then there needs to be an agreement, some documentation and all that stuff. But the idea is, as a network, we operate under one federal employee identification number.
Right.
Yeah, but we want both schools or 3 schools or 4 schools, if we have all those schools, to succeed. And so we might, like what we do at times is we also look at our expenses and see, okay, how do we split the expenses to help the other school, right? But for the most part, it has to be close to our basis of our enrollment, right? Because that's what we use. So if you have 1,400 students in one area and one area has 1,200 students, so chances that you have more expenses with one school and less expenses with the other school.
The way we book, so each student pays 1/1200 of your salary in one school, and the other school might pay 1/1400.
Exactly.
For overhead staff,
Yeah.
right?
Yeah.
Any questions on this? All right, then we'll go ahead and we'll approve both of these together. So I will ask for a motion for the approval of the second interim budgets for both Gorman Learning Center and Gorman Learning Center San Bernardino, Santa Clarita.
I move to approve the second interim budgets for Gorman Learning Center and Gorman Learning Center, San Bernardino, Santa Clarita. Second.
Thank you. I have a motion and a second. We'll go ahead and vote. I'm Josh. I vote aye. Andrea?
Aye.
Thank you. Talia?
Aye.
Thank you. Dory? Thank you. Sarah?
I,
Thank you. Dina?
Aye.
Thank you. The budgets are approved. Next item is the review, discussion, and approval of updates to the PLT contract. And Keisha McDonald. can you present? Is press the button. I think it's. That should be working. You want green?
Yeah. Oh, he probably did it. Just out of here. Okay, you can go ahead and verse.
Okay, let's try that one more time. Good evening, board members. All right, I'm gonna be reviewing the PLT contract and exhibits for you today. We can start with the PLT contract. So for the PLT contract, some of the key revisions are on page 6 and 7 of the contract. Due to the blockage of AB 51, which banned mandatory arbitration, the contract language has been revised to reflect the use of binding arbitration for dispute resolution. So that change you'll see updated in the contract for the binding arbitration portion. And just for your reference, AB 51 essentially was preempted because Federal Arbitration Act trumped the act that they tried to implement in 2020. I believe it was 2020 or 2020. So that language has been updated to reflect those changes. For the compensation agreement, there are minimal changes to the compensation agreement. There will be an exempt compensation agreement as well as a non-exempt compensation agreement. This is going to be your exhibit B. Okay, so the main changes that were made is the addition of the annual benefit contribution versus the monthly contribution. So same amount, but just verbiage in annual versus monthly. And then also a reflection of the FTE assignments for 0.5, 0.75, or 1 FTE, just shows the hours for those. So 1 FTE is basically your 40 hours, 0.75 will be 30, and then 0.5 will be 20 hours. Again, there is a secondary compensation agreement to reflect specifically non-exempt employees. And the main difference between the two is that one reflects hourly rate, wage, and one reflects salary. So your compensation agreement B for exempt will show the annual, and then for non-exempt, it will show the hourly rate. The one new exhibit that we have is the exhibit D, like David. Yes, and so this is the arbitration agreement. So in line with the changes that were made in the contract now has exhibit A through D. And exhibit D is the new exhibit, which reflects the complete language for the arbitration requirement that we have added to the contract. So employees will sign this in conjunction with the contract, which has that language. Did the board have any questions regarding the contract, exhibits A through D? Okay, well, I will.
I have a question. Oh,
Yes.
sorry. So in layman's terms,
Mhm.
what does the change of the arbitration and D, what does that do? What does that do? Like, what does that say?
So previously, of the law that they tried to pass previously would not allow employers to have binding arbitration as any kind of contract. So you could not require your employees to go through binding arbitration. Arbitration meaning that you're not going into a court, you're not going before a jury. So the arbitrator is going to basically decide the disputes. So since that was overturned, we can now put that back into our contracts that we previously had, but we had to take out because the law changed. The laws changed back, so now we basically reverted back to our previous language that we had.
Okay, thank you.
Any other questions from the board members?
Is the reason we have exempt versus non-exempt just because they don't meet the threshold annually?
Exactly. So good question. Yes, because California's minimum wage is consistently increasing year after year. There is a minimum threshold, meaning that you have to make a certain amount in order to be salaried exempt. If you don't meet that threshold dollar amount, then you have to be classified as non-exempt, meaning that you qualify for overtime, you have to abide by meal breaks and meal lunches, and you have to make sure that you're clocking your time. And so essentially, because the minimum wage has increased, we now have a larger amount of individuals in our PLT pool that are not meeting the threshold. So in essence, we have to have two different compensations to accurately reflect hourly rate, hourly versus annual, because they will have to clock their hours.
Can I ask out of curiosity, how many are full-time versus the 75 versus the 50?
Oh, yes, I can bring that up.
And this strictly applies to PLTs?
So this, only because it's for the contract,
Okay.
but exempt versus non-exempt would apply to any employee. Yes. So right now, as far as the breakdown for 0.75, we have 3.75 employees and then 7.5 employees. But someone can be, so for clarification, someone can be a full FTE and still be non-exempt. So I wouldn't look at it in that way, that's saying only the 0.5 and 0.75 are going to be non-exempt. You can be a full-time 1 FTE, but you're still not making that threshold amount. So you will still be non-exempt.
How many fall into that 40?
So the
Or
40,
I guess whatever. 100?
Full-time.
Full-time, yeah, how many are
Are
full-time?
they're about
you mean,
90.
are you trying to say how many are exempt versus non-exempt?
Yeah, so
Because
I
you could
got-
be
I got seven.
full-time, you can be full-time, but still non-exempt. Are you trying to determine how many are non-exempt?
No, just kind of wanted to see how many would fall into these. Each of these areas, the 0.5, you said there were 7, the
Mhm.
0.75 is 3. How many fall into that third category that's on the contract?
That's 1 FTE.
Yeah,
So we have approximately 91 PLTs. So, I mean, that's about 10 that are 0.5 or 0.75, so approximately 80. No problem. Any other questions from anyone? Okay, well, I'll turn it back to you, Josh.
Thank you.
You're welcome.
Since there are no questions, I would request a motion to approve the PLT contract for this coming year.
I motion to approve.
I second.
Perfect. Let's vote. I'm Josh. I vote aye. Andrea?
I,
Thank you. Talia?
Aye.
Thank you. Dory? Thank you. Sarah?
I,
Thank you. Dina?
Aye.
Thank you. The salary of the PLT contract and exhibits are approved. We're gonna go ahead and adjourn to closed session. I've got 5:48. Yeah, so there is food. So if you're leaving, I mean, you can grab some food, take it with you. Stay close. I don't know how long we'll be, but
Okay.
yes, we'll take a break. You can use the restroom when we Grab some food, sorry. I was trying to get to close session and. Is it, I think it's, I was thinking 13. They probably just raised it to 14. Cause then the other one went up too, right? Is it like, did it go from like 60? Oh, has it? Yeah, well.
unmute and see if Sarah can hear us again, and then we'll have her reply back.
Testing. Sarah, can you hear us? Sarah?
Oh, we're just. There we go. Okay, try again.
Sarah, can you hear us? Testing. Sarah, can you hear us?
Yes, sir.
Thank you. Perfect. We're ready to reconvene from closed session. I've got 6:49 PM. We have one item to report out of closed session. That is the board has approved the admittance of student number 88803 to Gorman Learning Center, and that vote was unanimous in the approval. That's all there is to report out of closed session. The next item we have is a review, discussion, approval of the lease renewal for the Antelope Valley Resource Center. At this point, we do not have a finalized lease draft. So we need to vote on tabling that? Or just take no action, so nobody does anything, okay. No action to take at this point on that. Items for the next meeting that we know about at this point? Okay. And based on the calendar, when is the next meeting? April 20? Oh, it is, yes.
Just to confirm, that's April 20th, you said?
That's correct.
Perfect.
April 20.
I'm sure we'll add some more things in.
Yes,
For
I'm,
now.
I'm sure we'll have things. Maybe a lease renewal.
Hey, that would be great.
Okay. Well, then that's it for tonight, everyone. Thank you. I'm going to call this meeting to adjournment, 6:51 PM.
Good night, everyone.
Good night, Sarah.